Hey everyone, it's Adam here with a quick market update for Thursday, 27th of February. Today I'll be covering the US dollar index, gold, and AUD USD, and the fundamental and technical factors influencing price right now. Let's jump into the charts and see what's happening. Let's begin with the fundamentals. So, the US dollar index saw a slight recovery on Wednesday amid growing bets on the Federal Reserve rate hike and looming tariff implementation set for early March. Geopolitical tensions, potentially new tariffs on China, and signals of semiconductor restrictions from the Trump administrations have added to the market caution, keeping the index close to its yearly low at 106.16. Now, if we jump into the technicals, we can see that the index is anchored above the 106 level, with attempts underway to climb towards the 100-day simple moving average. However, there are weak technical indicators, including a bearish RSI, a MACD signal, and a developing death cross between the 9-day and 100-day moving average, suggests that a break below 106 could pave the way for further decline at 105.9 and towards the 105 psychological level. Let's take a look at everyone's favorite pair, gold. On the fundamental side, we can see that gold has rebounded after a brief decline, reclaiming the crucial 2900 level as the US dollar lost its momentum. Now, investor sentiment remains cautious due to the uncertainties over President Trump's tariff plans and inflation concerns, prompting a renewed flight to safe haven asset, despite earlier profit taking that pushed price to a 1 week low. On the technical front, we can see that gold's daily chart is showing a bullish outlook as price remains above the 20-day simple moving average at 28.89, with a 14-day RSI near 64, indicating upwards momentum. Resistance is now centered around the 2931.5 and the all-time high of 2956.3. A clear breakout could target higher levels around 2980 and eventually the $3,000 mark, while a fallback below current levels would aim at the 2900 support zone. Now let's take a look at one of my favorite pairs as an Aussie, the AUD USD. This pair has been facing immense selling pressure for 4 consecutive days, trading close to the 63-cent psychological zone amid a recovering US dollar and ongoing tariff concerns. Now, Australia's recent CPI data, which showed a 2.5% year on year increase. Now, this combined with the warnings from President Trump about continued tariffs and potential chip export controls on China have compounded the fundamental headwinds for the Australian dollar. Now, technically speaking, we can see that the pair has broken below its previous bullish ascending channel, with a 14-day RSI hovering just below the 50 at 48.8. Resistance is currently seen as the 100-day moving average around 63.97, which is the 64-cent zone. A level that, if breached, would push the pair towards a psychological level of 64 cents, as we just said. Now, conversely, a decisive break below 63 cents may expose further downside towards the support at 62.77 cents and February lows of 62 and 35 cents. Thank you all for tuning into today's market analysis session. If you have any questions or would like me to cover any other pair, please feel free to comment down below and I'll be happy to do so. As always, good luck and happy trading.